Welcome to OnPay's webinar, Managing Small Business Payroll and Benefits Through COVID-19. OnPay is a cloud-based payroll service provider. From adding a COVID-19 area in-app to creating a COVID-19 resource center, available free to anyone, we want to make sure we're helping all employers as you navigate through what can feel like an overwhelming amount of information. After watching this webinar, you'll be able to understand the basics of two major acts that have been passed in response to COVID-19. Please keep in mind, we're also adjusting to a COVID-19 world, and that means your presenters are working remotely today, so please disregard any background noise should they come up. But first, let's introduce ourselves.
Hi, my name is Jordan Perry. I'm the Benefits Operations Manager here at OnPay. I have more than 10 years experience in payroll and benefits. I have my Certified Payroll Processor certification from the American Payroll Association and work closely with our compliance team.
And I'm Kara Rajapakse, Team Lead on OnPay's Partner Development Team. I work primarily with accountants and bookkeepers in coordinating their clients' onboarding, answering their questions, and more. Jordan, I know you've done a ton of research on the payroll measures we've all seen in the news recently, so let's get started.
Absolutely. But before we dive in, keep in mind that every business is different, and a webinar is no substitution for independent research or getting formal advice if you need it. We've done everything we can to make this webinar as helpful as possible, but we recommend that you verify anything you still have questions about.
Today, we're discussing several items and a whole bunch of acronyms. We'll start with the Family's First Coronavirus Response Act, or FFCRA, which includes an expansion of the Family Medical Leave Act, or FMLA. Under the FFCRA, we're also seeing emergency paid sick leave.
Next, we'll go into multiple components of the Coronavirus Aid, Relief, and Economic Security Act, or CARES Act. This includes the Paycheck Protection Program, which you may have heard about in the news as the PPP, the Employer Retention Credit, and finally the ability for employers to delay their portion of Social Security until a later date. This webinar is not an exhaustive overview of everything these include, but we'll talk about the ones most relevant to payroll.
We'll then wrap up with helpful links to help you manage your small business during COVID-19. Let's start with the FFCRA. Again, that's the Family's First Coronavirus Response Act. The FFCRA was signed last month and is effective until December of this year and piggybacks off the Family Medical Leave Act. Now, traditionally, the FMLA provided 12 weeks of unpaid leave and job protection to employees who need to take time away from work, either to deal with a major medical issue of their own or care for a seriously ill family member. Its intention really was to offer stability to employees. The FFCRA now expands FMLA and requires certain employers to provide employees with paid sick leave or expanded family and medical leave for specific reasons related to COVID-19. It provides employees of most small businesses with paid leave, either to address their own health needs or to care for family members. And it gives employers two new refundable payroll tax credits that are designed to immediately provide dollar-for-dollar reimbursement for the cost of providing COVID-19 related leave to their employees.
With the passage of the FFCRA, employees are able to take 10 weeks of paid family or medical leave to care for a child if their school or place of care is closed for this medical emergency. Employees must have been with the company for at least 30 days to take this leave and unable to work in order to care for a child whose school or child care provider is closed or unavailable due for reasons related to COVID-19. While this applies to all businesses with fewer than 500 employees, there are two exemptions. First, businesses with under 50 employees can apply for an exemption if an employee taking leave would jeopardize the viability of the business moving forward. What does this mean exactly? The Department of Labor recently advised that this means the employee leaving would cause financial issues that outweigh the revenue the business currently has, that the employee has specific knowledge or responsibilities in the business that are integral, and the employee cannot find any other qualified or available employees to substitute in their absence. Another exemption is for healthcare providers or emergency responders. Keep in mind, they are not automatically exempt from this. The employer can choose to apply for an exemption, and we recommend looking to the Department of Labor for this guidance, as the definition of healthcare provider here is very broad.
And if your business claims one of these exemptions, document, document, document. Keep these records on file for at least 4 years. Always a good rule of thumb for the DOL or IRS. Jordan, what benefits are we seeing if employees take this expanded family medical leave?
First, the first 10 days of the expanded family and medical leave are unpaid, but employees can use some of their accrued paid vacation, sick, or personal time off to cover this. Employees may also choose to use the time available to them under the Emergency Paid Sick Leave Act, and we'll talk about that in a moment. After the first 10 days, leave would be paid at 2/3 of the employee's regular rate of pay for the number of hours they would have typically worked. Pay will not exceed $200 per day and $10,000 in total, or $12,000 in total if using emergency paid sick leave for the first 2 weeks. Any unused portion of this pay will not carry over to the next year.
Is job protection part of the EFMLA?
Yes, but there are two exceptions. If you're an employer with fewer than 25 employees, you can be exempt from job protection if the job no longer exists because of changes affecting employment caused by this public health emergency, and reasonable efforts to find equivalent positions were made and failed, and employees are contacted if any positions come open within a year.
Remember, employees must notify their manager or the HR manager if they need to take EFMLA leave and provide the specific reason. A form to request EFMLA should be provided to all employees on the company intranet and or in a way that every employee can access it.
Now, let's discuss emergency paid sick leave. FFCRA offers paid federal leave for the first time and applies to both full and part-time employees. Similar exemptions that we saw with the EFMLA may apply, but more information is coming on that. There are conditions where an employee could qualify for emergency paid sick leave. Please take a moment and review these, and I'll call your attention to a few specific items. For number 3, please note, this diagnosis has to be done by a medical professional. The employee cannot self-diagnose. For number 5, the FSLA defines a child as biological, adopted or foster child, a stepchild, or a legal ward under the age of 18. It can also apply to those 18 years of age or older if they are incapable of self-care because of a mental or physical disability. The caregiving parent or guardian must be the only child care provider. And while the phrase experiencing other substantially similar conditions isn't fully defined at the moment, number 6 seems to leave room if things could change with COVID-19 in the future. Under emergency paid sick leave, all full and part-time employees can receive up to 80 hours of paid sick leave based on their average earnings over a 2-week period, if they're unable to work because of COVID-19 related reasons. There are some variables that impact how much an employee can be paid, and there are maximums detailed on the slide.
Great information, Jordan. And remember, all employers are required to notify employees of their rights under the FFCRA and post a notice either in their workplace and or make it available through something like email or their employee portal. So we've discussed parts of the FFCRA specific to payroll. There's also another act that was passed that we'll discuss next, the Coronavirus Aid, Relief, and Economic Security Act, otherwise known as CARES. The CARES Act was signed into law on March 27, 2020. While many details are still being fleshed out by regulatory agencies like the IRS, Department of Labor, and Small Business Administration as they implement these measures, we can give you an idea of how it can help small businesses. We'll go over the following: the Paycheck Protection Program, or PPP, payroll tax credits offered under the Employee Retention Credit, deferred payment of employer Social Security taxes. Let's start with the Paycheck Protection Program. This expands the SBA's 7A loan program to businesses affected by COVID-19. Now, before we get into too much of the details of this program, as we said before, things are continuously changing. As of this broadcast, the SBA is not currently accepting new applications based on available appropriations funding. However, just like everything else with COVID-19, this is likely to change. The application period began April 3rd, 2020 through SBA lenders. That is important. If they do open up the applications again, you'll need to take care to go through an approved lender or institution. For those of you who have already applied, all loan payments will be deferred for 6 months. This loan does have the potential to be fully forgivable. Only 25% maximum can be used for non-payroll expenses. 75% must be used for payroll. Essentially, businesses must keep employees on the payroll or rehire quickly.
And another thought, Kara, we'll be going over other tax credits that businesses can potentially use. But companies who are able to take an SBA loan under CARES Act should review limitations for taking advantage of other tax credits under CARES. And any who may apply in the future should those funds come available.
Now, we did some quick math and looked at how the PPP funds have been dispersed. We also recommend looking for updates from the DOL and SBA on further funds being released. Now, that's just one part of the CARES Act. The next two credits we'll discuss have become more interesting as the PPP funds have all been dispersed already. First, we have the employee retention tax credits. They incentivize employers to keep employees on their payroll during the COVID-19 outbreak. Certain employers are eligible to have 50% of up to $10,000 in wages paid if they've been financially impacted by COVID-19.
And those employers can include a business that is fully or partially suspended by government order due to COVID-19 during the calendar quarter, or an employer whose gross receipts are below 50% of the comparable quarter in 2019. Once their gross receipts are above 80% of the comparable quarter in 2019, the employer will no longer qualify after the end of the quarter. And don't forget, companies taking an SBA loan under CARES cannot take this tax credit.
Well said, Jordan. Also bear in mind the effective date of when these wages are paid. Qualified wages are paid after March 12, 2020 and before January 1st, 2021. Your business size plays a part too. Take a look at the chart we have on the screen. If your business had 100 or fewer employees in 2019, the credit is based on wages paid to all employees. If your business had more than 100 employees in 2019, the credit is only applicable to employees who are not providing services due to circumstances related to COVID-19.
Make sure to let your payroll provider know if you're taking advantage of this credit, as it does need to be reported on Form 941. Additionally, employers that need an advance payment from the IRS can request one via Form 7200. Now, let's discuss CARES option to delay payment of employer payroll taxes. This only applies to the employer portion of Social Security tax, which is 6.2%, not the employee's portion and not Medicare either. This is a deferral, meaning employers are still responsible for paying that money to the IRS. 50% is due by December 31st, 2021, and the remaining balance is due by December 31st, 2022. If you're working with an accountant, we'd recommend you loop them in so they can work with you to make sure these payments are not missed. 2021 and 2022 are a ways away. Another thing to consider to help maintain liquidity is to switch to a pay-as-you-go workers' compensation policy versus a more traditional workers' compensation policy. Pay-as-you-go policies don't require a large lump sum payment up front and are calculated and paid based on your actual payroll data as opposed to estimates. This can help prevent costly surprises at the end of the policy year if you underestimated how much payroll you would have. Pay-as-you-go workers' compensation policies can also help you keep more money in your pocket if something unexpected were to happen, such as what we're experiencing now with COVID-19.
Jordan, there have also been some updates under the CARES Act that impact 401k retirement plans, right?
Yes, the CARES Act provides new options for participants to use money from their 401k retirement accounts. It changes the participant loan rules and offers options for special COVID-19 related distributions. So now is a great time to reach out to your 401k plan provider and get more information about how they can help you and your employees.
We're also seeing several cities and states offering their own small business emergency funding programs. We've listed a few examples here on the screen, ranging from California, Wisconsin, and New York. It's important to review all funding opportunities for you or your clients, so check your local areas. Now, that was a lot of information. We hope you've learned more about the resources available to you through these two acts. OnPay has a great resource link available, even if you're not a client of ours. Head over to onpay.com/COVID-19 for articles and guides to help you navigate payroll in a COVID-19 world.
And from all of us here at OnPay, we hope you stay safe and have a wonderful day.